Good afternoon, everyone. Welcome to the Buying a Home in Eindhoven webinar. We will be discussing what it is like to buy a home in Eindhoven and in the Netherlands in general, and what the process is going to look like. Before we get started, I'd like to share that today's session will be recorded and shared, meaning that you will receive the webinar slides plus the presentation tomorrow, most likely. So if you miss a shoot, I should lay down in the grass because the weather is so amazing. I totally understand. You can rewatch it tomorrow then as well. Let's get started. My name is Ludo. I am an expat buying manager in the Greater Amsterdam region. I speak Dutch. I am from the Netherlands, born and raised here. I'm a proud, well, not a mother, I should be a father, proud father of 2 cats actually. I've lived in the USA for 3 years in the Boston region, now been back in the Netherlands for quite a few years, and have very much enjoyed it. I live in a new build home currently, have lived in apartments, houses, and now in the new build properties of Citadel. Yeah, loving to share my experience with you guys. Now you know who you're looking at, but I would also like to know who I am dealing with today. It's always nice to start a little poll to see who I'm chatting with. Potentially we can alter the presentation a little bit to the people that I'm talking to. So I just launched a poll. It's of course not obligated, but feel free to fill it in so that we can get some intel from how you found us, but also what made you decide to buy, etc. Well, I think the majority of the people are wanting to buy because the rents are too high. That makes total sense. Rents are currently high, and the expectation is that they will keep rising. So it makes total sense that you want to put the money in your own pocket instead of the pocket of your landlord. Thanks very much, guys, for filling that in. I will end the poll so we can get cracking. The agenda of today, we'll be doing a little introduction and sharing some market information, what the market drivers are currently, what you will need in savings, and then some tips to win in the market and what the timeline, the buying timeline will look like. I don't do this by myself. I think greatness is achieved in the agency of others, and that's why we have an amazing team here at Expat Housing Network. People from all over the world. We have Katie with us today. Good to mention, by the way, if you guys have any questions during the webinar, feel free to ask them in the Q&A section. Katie is here specifically for the Q&A, so if you have questions, she'll be ready to answer them. And otherwise, if there are any questions that are unanswered, we can answer them afterwards as well. Definitely. We have people here from Brazil as well. We have Ellen, who has lived in Thailand for a major part of her life. Rick has been in South Africa and South America for quite a time. And Philip, our Belgian meister. Cool. Well, Expat Housing Network. Good to mention is that we are no traditional real estate agents. Why is that? Is because we only help with the buying part and with the renting part. So we don't sell homes and we don't let homes. So we are specifically in this market where it's quite chaotic and difficult to buy or rent a home. We are specialized in this specific part of the process, or within the part of the branch, I would say. We charge a fixed fee, not a commission. That means that you always know exactly what's up. Either you're buying a home of 200K or 500 million. I don't care, you're always going to pay the same amount. No hidden fees or anything like that, no percentages. You see and you pay what you get. As you saw on the previous slide, we have a lot of internationals working at Expat Housing Network. That's why we know what it's like to settle in a new country, either as an expat here in the Netherlands or have lived abroad somewhere else. So we make sure that you don't make the same mistakes as we do. I think we'll see that here as well. Some added value from EHN. Selling agents take offers from EHN a little bit more seriously. If they know that you as a buyer have professional help and are already paying to be in this process, they know that you're also serious about the potential offer that you're making. 9 out of 10 times it's possible for us to actually book a viewing when for someone without a buying agent. It's not possible. Selling agents tend to have specific days for people who have a buying agent. And sometimes it's also possible to book double viewings when you are with a buying agent. So that's quite nice. Of course, we support by reviewing Dutch legal and property documents. Even though the majority is not from the Netherlands, we do have a lot of Dutch speakers in the team. So we're able to review all the Dutch documents as well. This is a very important one. We help define market value through market data. We'll talk about it a little bit later on as well. But yeah, it's all about value, value, value. Only once we know the actual market value, we can come up with a competitive offer. So this is a very important one. Obviously, we'll inform you about the rules and regulations, and the final one, again, to make sure that you don't make the same mistakes as we did. Cool. Well, a small little poll. I'm curious where you are in the process. Have you already gone to a viewing? Have you made an offer already? Sometimes we even have people who already have an offer accepted, which is quite special. Then you're definitely at the right place. Quite lucky as well. And then to see if you've had a chat with a consultant at all. Good to see that the majority is in the researching phase. Makes sense, that's why you're here. I see someone is going to viewings as well. Cool. Always nice to get a sense of what the properties look like compared to the pictures that you see on Funda or on Ferraris. Great. Well, thanks very much, guys, for filling that in. We'll move on. Go to the next slide. Some market info. Let's start with some numbers. So as we've all heard, the prices have been rising quite drastically, especially in the last year and a half. We thought when COVID hit, everything would go down or at least stabilize, but well, it was 180 degrees different. Prices rose up significantly, as you saw here, where the average price in 2021 in Eindhoven was 386,000 euros. It has risen within a year up to 426. So that is an increase of 40,000 euros, which is in a year quite a significant amount. If we look at new builds, the average price is even a little bit bigger. Of course, the property quality is also amazing when buying a new build, so that reflects in the price, but that is around 4.5 per property. Then some figures. Well, a lot of numbers. I think there are a few that are important. Obviously, the average purchase price, which has is different from or has risen with quite a significant amount. But I think the sales time is also an important one. Sometimes it seems like you have all the time in the world to go to a viewing, maybe go to a second viewing, things like that. But here in the Netherlands, but specifically also in Eindhoven, properties are being sold very, very quickly, within 21 days from being listed. This includes the viewing times, but also the due diligence time. So getting the offer accepted, then there's still another 1.5 weeks to actually sign the purchase agreement. That all happens within 21 days. So if it's your dream home, you have 21 days to actually secure that home. This correlates with the rising prices, is that the amount of houses for sale is super low. Same goes for the houses that are actually sold. Compared to last year, well, the percentages speak for itself. It's rather significant, for sure. Well, this doesn't say too much currently, but this is also rising and therefore creating a higher average purchase price for the entire property. Well, you must be curious, why are the prices rising? There are a few factors. First of all, there are some fiscal benefits currently applicable in the Netherlands. Why do I say currently? Is because things are changing a little bit, but as of now, they are still applicable. First of all, there's a transfer tax exemption. This is the tax or the transfer tax is the tax that you pay when ownership of a property is transferred from a seller to a buyer. This is generally speaking 2% of the purchase price. Now, if you're buying as an investment, the transfer tax is a little bit higher. If you were to let it immediately, if you were to rent it out immediately, you pay 8% transfer tax, but in this case, not so important, because the majority here is just to buy as a residential property. Typically 2%. But if you are under 35 years old, you're buying under 400,000 euros, and it's actually the first time you are using this exemption, then you don't have to pay any transfer tax. So instead of paying 2%, you'll be paying 0%, which can be quite a large saving. Over 400K, that's a saving of 8,000 euros that you do not have to pay. And keep in mind, these costs are not coming out of a mortgage. These need to come out of own pocket. So it can be quite beneficial to stay under the 400K if you're under 35 years old and it's your first home. There's an interest rebate. Obviously, you're going to be paying interest on your mortgage installments, but there is a very attractive interest rebate, which lets you subtract around, I think, 37–40% of the interest at the end when you do your tax returns. There's no capital gains here in the Netherlands. So if you have a home, you live in it for 5 years, and then you sell it again with a nice profit, plus you have repaid on your mortgage quite a lot. There is no capital gains on there. So all the money that you take back from that sale, you can put directly into your own pocket or potentially a new property. Now, this is an interesting one as well, the tax-free parent donation. Currently, parents are actually allowed to donate 100,000 euros via the purchase of a property without paying any taxes over it. Like I said, currently that's 100,000 euros. Next year, that's going down to around 30,000 euros. And then starting from 2024, that's actually gone. So if you do have some wealthy family members, it's called a parent donation, but if your uncle or grandparents or anything like that want to do this as well, it's also possible. If you have wealthy family members that want to support you in buying a home, this is the time to do it for sure. Well, besides that, the fiscal benefits, the interest rates are rather low currently as well. Money isn't free, but it is close to, or at least very, very cheap. They were at 1.5%. They are rising a little bit, but we're still at the 3–3.5 range. And keeping in mind that the interest rates back in 2016 were more towards the 6%, we are still at a very low interest rate. Makes it attractive to buy. On the other side of the story, the rents are still high. The expectation is also that that will keep rising. And with the rents, you throw away your money every time at the end of the month. With monthly payments of your mortgage installments, you're putting the money into your brick, so to say. In other words, you're saving up money. So it's far more attractive to do that than paying high rents. And I think this is one of the biggest drivers currently of the market, and that is just the simple lack of supply. There are a lot more people looking for a home compared to people that are people offering their homes and homes that are available. I think I heard on the radio this morning that for every 150 people looking for a home, there are only 100 available. Well, you can imagine that that is definitely a driver in the current market. And the expectation is that this will not be resolved anytime soon, especially in big major cities like Amsterdam, Eindhoven, Den Haag, Rotterdam, Groningen. These are big cities that are already pretty crowded, so it's quite difficult to build big residential areas where residential areas are already built. Then some measures that are being put into place to counter the drive in the current market. First of all, on the left, the self-occupancy obligation. This is rather new. It's actually since the 1st of March this year. Now, what is mentioned here is specific to Eindhoven. Every municipality has their own specific self-occupancy obligation rules and specifics. So keep in mind that if you are looking at tad different municipality, that it might differ a little bit. But in this case, if you're buying a home with a WZ value under 355,000 euros, you're actually obligated to live in the property for a certain period of time before you can rent it out. So this makes it far less attractive for an investor to buy the property that you are potentially looking to buy. And therefore, it makes it, in brackets, easier for a starter like you and I to buy into the market. Now, if we look totally on the right side, we see that the interest rates are rising. Well, we talked about that a little bit before. This has to do also with the inflation, and this can potentially be a temporary thing. I'm not very sure, but I do think that even though the buying power is going down with that as well. It also means that the market is cooling off a little bit. And with the rise that we saw, a couple of months ago to a year, it's just not sustainable. So I think with the interest rising, it makes sense that it's happening. And in the middle, we see what has happened, that the house prices in February have risen with 20%. And the expectation is that the growth is continuous. Well, I mentioned there as well that the price index has been on the rise ever since the low of 2013, where it had a crash in correlation with the 2008 financial crisis. Cool. This is an important one as well. I talked about a little bit before as well, but buying a home costs money. The bank will only give you 100% of the market value of the home, meaning that any other costs will need to come out of own pocket. What kind of costs am I talking about? First of all, the transfer tax. Of course, if you are able to use the exemption, then the transfer tax is not applicable. So mentioned here again, not for new builds or people younger than 35 buying up to 400K and using the exemption for the first time. Otherwise, if you cannot use the exemption, obviously it's 2% of the purchase price. Besides that, you will need to go to the notary, first of all, to have a transfer deed. This is the deed that officially grants you ownership and takes away the ownership from the seller, typically between 600 to 1,100 euros. We'll need to go to the notary as well for the mortgage deed, unless you're buying fully out of own capital. Then a mortgage deed is obviously not needed. If you are in need of a mortgage, then you will need a mortgage deed, and this is in the same price range as the transfer deed. Depending a little bit on where you're buying, which notary you're using, we always advise you just go with the cheapest if they speak, if their English is good enough, because at the end of the day, they're doing exactly the same trick. Not saying that it's easy though. Now, I can assume that you would like to get some financial advice as well, either from a bank or from a mortgage broker, typically between 1,500 euros to 3,400 euros. A typical real estate agent charges you around 1 to 2% of the purchase price. Like mentioned at the beginning, EHN doesn't charge you a percentage, we charge you a fixed fee. We'll come back to the actual fees a little bit later on. But yeah, generally 1 to 2% of the purchase price. The appraiser is someone who is officially going to evaluate the home. So even if my price research says the property is valued at 400, the bank will not take my spreadsheet as an actual price research. So an appraiser needs to come in to actually appraise the home and write up a report so that the bank uses that as an actual max mortgage amount. These costs are around 650 to 800 euros. Technical inspector obviously comes in to inspect the house on a technical level, make sure that everything works as it should, and that you can get a house that you expect to get. If you do not master, or if you haven't mastered the Dutch language completely, then you are obligated to have an interpreter come for the transfer. So not for the signing of the purchase agreement, but for the transfer. This is around 300 to 350 euros. Technically speaking, the interpreter needs to come or needs to speak in your mother tongue. So if you're from France, he needs to speak French. If you're from Russia, it speaks for itself. My advice is always, if you speak English well enough, just go for an English interpreter, because they tend to be a lot cheaper than languages that are more rare, so to say. Bank guarantee, it is always obligated to make a deposit in the Netherlands when buying a property. This is always 10% of the purchase price. Now you can either do this by paying the 10% from your own savings out of your pocket, or you can ask the bank to make the deposit on your behalf, as it's not always very normal to have 10% of a big lump sum on your bank account. So it can be quite nice to have the mortgage provider make the bank make the deposit on your behalf. This is called a bank guarantee. They charge you either 1% of the guaranteed amount or roughly 250 euros. And last but not least, if you are buying a property that is under 355,000 euros, then you are actually able to use the NHG measure. This is an institution, a governmental institution that actually works as a mortgage provider, but at the same time also as an insurance. So they are able to give you out cheaper interest rates. You pay a one-time fee of 0.6% of the mortgage amount, and then you can get cheaper or lower interest rates. But more importantly, what they also do, if you buy a house now, to work in examples, if you buy a house now from 400K and you want to sell it, or no, you don't want to sell it, but you have to sell it in 2 years because God forbid you lose an arm or you can't work anymore and bad things happen. And the market has crashed. So instead of the property being valued now at 450, for example, it actually is valued at 300 and you've only paid off 20,000 euros. Then the NHG institution will actually cover the rest of the mortgage amount that you have outstanding, so that you don't come into huge debts and even more awful situation. So if you are buying on a 355, it can be very nice to get a mortgage via the NHG, National Mortgage Guarantee. Cool. On the right side, we have another column where it says tax deductible. All the costs that are in relation to a mortgage are actually tax deductible. So we're talking mortgage deed, mortgage advisor or bank, appraiser, and any NHG costs. The technical inspector, if we as a buyer would like to have a technical inspector, then it is not tax deductible. If the bank demands you to have a technical inspection done, possibly due to the fact that the house or the neighborhood has had foundation issues or things like that, then the technical inspection is also tax deductible. Alrighty, very important one. 3 tips to win in the current market. First of all, we touched base on it already a little bit, but value. Very important to know what the market value is. To again work from an example. We have the specific street here, number 7, with an asking price of 395,000 euros. This is an asking price that is defined by the selling agency, in this case, the best intermediary group. They've done their research and they think that 395 is a good asking price. If we go to the next slide, we see here asking price, but actually market value seems to be 415,000 euros. So a tad higher than the asking price. This happens a lot. Selling agents use this as a tactic as well, because people that have a budget of up to 400K are now looking at this home still because it's this 395, and they might fall in love with it at a viewing. While the market value is 415, they might think, screw it, I love this house so much, let's make our budget bigger and make it to 415. However, in this case, and it's also, I think, in correlation with the current market, even though the market value is 415, the property is actually purchased at 435. So there's so much competition, there are so many buyers, people with quite some cash on their hands. So to actually purchase the home, you have to pay 435,000 euros. Well, what we see here is that the difference between asking price and purchase price is 10%. I don't like to use this 10% because the asking price is just something that the selling agent came up with, but is not a good representation of the market value. There are also no rules in the Netherlands for asking prices. I know that in Belgium, for example, you're not allowed to have the asking price higher or lower than 10% of the market value. While in the Netherlands, this selling agency was actually, technically speaking, able to list it at 100,000 euros. So you can imagine how much the overbid percentage would be then. In this case, the actual market or the actual overbid percentage is 4.8%. We just have to look at market value. It's still in brackets only, but it's definitely a lot less than 10%. What you also see in a different example, another agency also sold this home, but they listed it for 375. Still market value 415, still purchase price 435. Then overbid percentage is all of a sudden 16%. Again, don't use these percentages. If you hear this somewhere from friends, colleagues, whatever, make sure that they give you the percentage over market value and not asking price, because it doesn't mean anything. Still, the percentage over market value is 4.8%, and that's the one that we want to look at. So that's why it's very important that before we make an offer, we do a good price research. Katie is one of the best at it, and we have a lot of great colleagues that do that as well, to make sure that you know what market value is and you know where you should base your offer on, not on the 375, but in this case on the 415. Cool. Well, value is important, but making a winning offer is also important. You would say that is in correlation with the previous slide. Obviously it is, but a winning offer is not always the highest price, so to say, what you see here. It's offering a good price. And what we mean with that, if in the previous, and I'll just go back to it so it makes a bit more sense. If in this example, we, instead of offered 435, we offered 470, and we said to the sellers, but we do also need a mortgage of 470, yeah, we would never be able to get that, because the bank, as we mentioned before, will only give you 100% of the market value. So we can offer 470, but that would mean that we have to cover the difference between 415 and 470 out of our pocket. If we say to the sellers, yeah, but we need a mortgage of 470, it's a beautiful high offer, but it doesn't make sense because we're never going to get it, and therefore the chances of the purchase going through are very, very slim. So offering a good price in that case is important. Besides that, offering security to the seller is also a big one. What we mean with that is saying, for example, that we are not relying completely on a mortgage, that we have a deposit that we are willing to put down, see it as a down payment, that if we're making an offer of 415 or 435, that we are actually going to be adding or using 50,000 euros out of our own savings to finance the property, and therefore don't need a full mortgage amount. But it also means that we, for example, share a document that has been shared with the mortgage advisor saying, I, mortgage advisor, am very confident that my clients are able to get a mortgage of this amount. Just to give the sellers as much security as possible to show we are serious, but also competent buyers. Offering the least amount of hassle is also a big one. I think especially in the Eindhoven region, selling agents prefer not to have offers with a technical inspection. Especially if properties are on the younger side, it is not always needed. But I myself am working mostly in Amsterdam. We see properties are in 1800s. There, it's definitely advisable to have a technical inspection done, so you know exactly that maintenance was good and all. But it might be something for a seller to say, yeah, but I just want to sign the purchase agreement as soon as possible. And if the buyer still needs a technical inspection, might pull out based on small minor things that come out of the inspection, it's just a headache. We'll move forward with the offer that has the least amount of hassle. So that is something to take into consideration. And the last one is something we see a lot nowadays, actually, where, of course, people want to sell for the highest price, but even though sellers want to get as much money as they can, they also want to sell a property to, or sell their property to a person, couple, family that is going to take good care of the home, right? Or start perhaps a new family instead of selling to an investor that is just going to renovate it and then flip it quickly. So adding a small profile of yourself with a picture of your family or with yourself definitely adds added value. If you're offering the same price as an investor with the same conditions and you show that you're going to take good care of the home and are so excited about moving in, they're definitely going to move forward with you in comparison to an investor that just wants to make a quick buck. Cool. Then the last one, due diligence. Well, I think there's a question after this as well, so I'm not going to spoil too much, but due diligence consists of two parties, technical inspector and the appraiser. The question is, do you book them before or after your offer is accepted? Please just move towards the chat and feel free to fill in the chat if you think you booked the inspector and appraiser before or after your offer is accepted. Wait a few minutes for some answers to come in. Just curious to see what you guys think. It's going to be the answer. All right, I see some before coming in. George thinks it's after. Before, so I think it's a mixed group. Nice. Yeah, definitely mixed. I think it's an even amount of befores and afters. Well, thank you very much, guys, for replying. The answer is actually right over here. So that is just after the offer is accepted. Now, why is that the case? Of course, we can also book in the technical inspector and the appraiser before, but it is not guaranteed that our offer is accepted. You might have heard from friends or colleagues that generally nowadays it takes a few offers to actually make a winning bid. So that would mean that we have to get the technical inspector in 3 times, the appraiser in 3 times. That they don't work for free, so they will send you an invoice 3 times, and the appraiser will do the same. So that means, and we just saw in a few slides before, the appraiser can be up to 800 euros. And that's a lot of money down the drain for properties that you're not even going to live in. So that is why we have the due diligence done right when the offer is accepted. So the 1.5 weeks of due diligence time. Preferably, we'll have it as soon as possible so that before we actually sign the purchase agreement, we already know what the appraisal value is and we know what the technical value is. And as mentioned before, you are only obligated to move forward with the purchase once you actually sign the purchase agreement or the purchase contract. So if here it shows that there are big technical defaults at the house, we can say, okay, seller, we didn't sign up for this, we're pulling out, and then they can't charge us any fines or anything like that, and they'll have to resell at that moment. So that's why we do it here. Now, why is the 3-day cooling off period mentioned is because even though I mentioned that from the moment that you sign the purchase agreement, you are then fully obligated to move forward, you still have a legal time period of 3 days where you have your cooling off, your time to rethink and wake up and think, oh God, what did I do? Those 3 days are for you to make sure you really made the right decision. So it's 1.5 weeks plus 3 days in that sense. Then to give you a broader idea of the timeline, I'm just going to go through it completely. So we'll start on the left. Obviously, we'll start the search, depending on the package that you go for with Expat Housing Network. We'll do this together, or you'll be searching by yourself. Luckily, everything will be on Funda. So if you wake up every morning, grab your cup of coffee and open Funda, you'll miss out on nothing. You'll see everything that is newly listed. And from there on, book a viewing, go to the viewing, and potentially move forward. This is also the time, it seems a little narrow, but actually a lot happens here. So booking the viewings, going to viewings. And this is also where we do our pre-check, so the price research and the property document review. Now then we obviously make an offer and hopefully get the offer submitted, or sorry, they get the offer approved. Then this is the time period we just saw on the previous slide, the 1.5 week where we do our due diligence, appraiser comes in, technical inspector comes in, and then we sign the purchase agreement. Now, together with the appraisal report and the signed purchase agreement, you can apply for a mortgage. So once we have those documents, you send them off to your bank or to your mortgage advisor, and then that application starts. You don't need to wait after the 3-day cooling off period to do that. You can do that immediately, like an hour after signing, actually. But yeah, you have the 3-day cooling off. Well, if you don't make use of it, then the actual sale is pretty final. Averagely speaking, we need around 3 to 4 weeks to get the mortgage approved. And right around here, you get your application approved. It's a hooray time. You open a little bottle of champagne, because that means that the majority of the stuff is all online and nothing really can go wrong. Depending on the time that you have agreed upon with the sellers, you either wait for a few months because they still need to move out or move into their new home. But you'll know this when you sign the purchase agreement. At one point, you'll receive the statement of completion. It's a fancy word for final invoice from the notary side. This final invoice consists of potential transfer tax, our costs, the appraiser's costs, the financial advisor's costs, but also any municipal taxes that still need to be paid will all be on one final invoice. And then it is, so that makes your life a lot easier. You just make one payment, and then it's up to the notary to actually pay out everyone accordingly. So makes your life easy. Then right before we go to the final meeting, the final transfer at the notary, we'll actually go to the property to make sure that the property is still in the same state as we expect it to be. I've had one case where we bought a 3-bedroom apartment, and then during this time period, so between this orange one and this orange one, the sellers thought, yeah, the rooms are quite small actually. Let's take down one wall and make it into 2 bigger bedrooms. Well, obviously that's not allowed because we bought a 3-bedroom apartment, and it shouldn't be that now at transfer we're having a 2-bedroom apartment. So that's why we have a technical inspection, just to make sure that it's still the same home as we thought it was going to be. Well, if it is, fantastic. We'll go to the notary, we'll sign the transfer deed, the document where ownership is transferred from seller to buyer. You'll sign the mortgage deed, the deed where you say, okay, bank, I'm now fully in debt with you guys. The property is the collateral. And if I stop paying my installments, you can auction my property off. Well, worst case scenario stuff most likely won't happen, but that is what the mortgage deed is for. And that is also the big moment where you get the keys and you are officially the owner. 2 hours later, you can move in and do whatever you want with the home, within a good reason, of course. Then you still have a 2-month liability term. It's a little bit of a gray area. We say 2 months, but I always say to my clients, use your house extensively within the first 2 weeks, actually. So open all the windows, make sure all the heaters go on. Make sure that you test everything within the house, because within that time period, you can still go back to the seller and say, hey, this was supposed to work and it doesn't. Please fix this while we're still in the liability term. The whole process, on average, I would say it would take between starting and actually getting the keys, 3 to 6 months, I think is a good time slot, depending, of course, on how active you are, how many properties are being offered, how competitive our offers are, but also depending on how quickly the seller can transfer, things like that. There are a lot of variables in play. Cool. Well, I promised you our fees, so here they are. This is from Expat Housing Network, of course. We have 3 packages currently. We have the Smart package, the complete package, and the new build package. Smart package is a little bit more for the independent buyer, the ones that are familiar with the process, with the market, and enjoy doing these things by themselves. So you'll book the viewings yourself, you coach the viewings yourself, you'll be going to the third-party meetings like the technical inspector and the appraiser by yourself, and the notary obviously as well. Of course, we'll still be there to review all the documents, do a price research, make the offer on your behalf, be in contact with third parties, with the selling agent, etc., etc. So you'll see me a lot, but it will only be digitally. With the complete package, we'll also be there to schedule the viewings for you, attend the viewings. We'll be there at all the third-party meetings, and we'll offer some more transfer support. And then we actually also have, and it's a new package, the new build package. This is a package for if you're looking to buy a pre-construction home. Obviously, we can't go to a viewing with you because the building hasn't been built yet, but we will join you to meetings with the selling agent and with the developer. We'll do some search for you. We'll register in the different channels that need to be registered in to be able to find your new build home. And we'll make sure that you find the right and secure the right new build property. Cool. All right, the big moment where you guys are able to ask the questions that you would like to ask. I think I saw a question pop up before, but my lovely colleague Katie has already answered it. If you do have any other questions, guys, feel free to pop in the Q&A now. If nothing pops up, that is also totally fine, of course. Then feel free to book in an intake with us to talk about your specific situation and anything you would like to get answered. Within means of the housing market, of course.
That's funny you say that, because we actually do have a lot of people reaching out for other stuff. But
well, that's why I say
we're able to direct them to the right person. So guys, if you have any questions, just contact us and we'll be able to help you one way or another.
Exactly. Cool. All right. Well, I don't see any questions pop up.
No.
Like mentioned before, we'll share this presentation with you guys together with the recording and slides. So there are some buttons within the presentations that you can press on. For example, the speak with an expat buying specialist, but also some links for sources, etc., etc. I think there's one question coming in. A question from Red. Don't I have to speak with the bank to see if they will allow me the mortgage? Well, that's a fair question, Red. Yeah, so what we advise you to do is have these processes walk side by side or simultaneously. So indeed have a chat with your bank to see if you are eligible to even get a mortgage. My advice would be have a chat with if you think you have a specific situation, have a chat with a mortgage advisor, independent mortgage advisor, so that they can advise you specific mortgage providers that are maybe a little bit easier within your specific situation. But it is important, of course, to know beforehand what your lending capabilities are, so that we know what kind of budget and price range we should look in. Because if eventually your price range is, for example, 400, and we're looking at houses of 1.5 million, yeah, that is going to be a little bit difficult to secure a mortgage of 1.5 million. I hope that answers your question.
Perfect. Thanks a lot for your clear explanations, Ludo. I have left I left a general email in the chat in case you just want to reach out to us. Otherwise, we'll see you on an intake, hopefully.
Indeed. Sounds good. Thanks very much for joining, Katie. I hope you still enjoy the weather a little bit. I know I'm going to. And then, well, hopefully we can meet each other on a rainy day.
Yeah, perfect. Next time on the boat.
Exactly. That's a deal.
Bye, guys.
All right. Bye, guys. Thanks very much. Have a good evening.